With all the inflation and debt caps and credit downgrades, what is going to happen to silver and gold?
Well, I was looking into what the experts like Ted Butler and Jason Hummel and others like USGS and the US Mint for the follow information, so first I would like to say thanks to them. There is so much new paper inflation with QE1 and QE2, and now the Bernanke is pushing for QE3. But the problem didn't start recently.
I'm listening.
The 1980 peak did not work out all the paper excesses. If it did, gold would have reached about $7,000 per ounce. If all the paper excesses are worked off next time, we may expect the U.S. gold hoard to be equal to the money in U.S. banks, which would imply a price of about $38,314 per ounce. To get that number, simply divide the current $10 trillion in the banks M3 soon to be discontinued by the 261 million ounces of official gold, which may not even exist.
Holy crap. Seriously?
To get to about $40,000 per ounce for gold, to catch up to all that past inflation, we would need a growth rate of about 30% per year, starting about now in 2011, for about 15 years.
What is the growth rate now?
In 2010 and so far in 2011 it has been about 18%.
Okay. Not exactly where it needs to be.
It does not take into account any additional inflation, paper money creation that will likely take place between 2011 and 2020. Yes, that's right, $40,000 per ounce. Could happen if they stopped all money creation today, and for the next 9 years. But with Bernanke at the helm of the Fed, we will see massive continued inflation. It does not take into account the vast amounts of money in the bond markets, which is also money and a competing investment with gold. It does not take into account that many other nations have paper money, both US dollars and their own currencies, that they will want to sell to buy gold, thus creating a worldwide bull market in gold prices. It does not take into account human behavior, which is that people will move into gold more and more as the fraud of paper dollars and the entire dollar system continues to be exposed. Also, as gold moves up, more and more people will recognize the trend of gold is up, since 30% annual returns, which is the conservative figure.
Okay.
So, taking those factors into account, gold could rise to $100,000 per ounce. If we account for most bond money moving into gold. Further, gold could rise to $1 million per ounce. If we assume that the money supply will rise another tenfold in the next 15 years.
Should I wait for a correction to buy silver?
No, I wouldn't advise anyone to wait to buy. If silver is headed above $200 per ounce, it does not really matter too much if you buy silver at $38 or $49. It is far more important to actually have silver and sell paper money before the price of precious metals begins to really skyrocket. Because the remaining silver supplies, less than 130 million ounces of refined silver, are valued at about $1 billion. And yet, there are relatively massive amounts of money, $22 trillion bond market, $10 trillion money in the banks, M3, $10 trillion worth of yen, $2.6 trillion dollars in Asia that need the protection of a good investment, like silver.
Okay.
Silver will be worth the modern equivalent of about $100 to $200. And for physical transactions smaller than that, copper could be a suitable substitute. This would imply a price of $3,110 per ounce to $6,220 per ounce for silver.
Why not mine more silver when the price goes up to equalize the price?
Silver will be the first element in the periodic table to become extinct by 2020 according to the U.S. Geological Society. As a matter of fact, since the Treasury had a run on the silver eagles recently, the U.S. Mint and Treasury is reporting that there are no more silver reserves for coinage left.
None? Let me get this straight. The U.S. government has no more silver reserves.
I actually expect that silver could reach a ratio of 5-to-1 to gold, due to the shortage of silver, and increasingly high investment demand for both metals in general. In that case, 5 ounces of silver would be worth a year's salary, or a modest home, or about 1/5 of today's $40,000, or about $8,000 of today's money, not counting future inflation.
Wow. Wait a second. 8,000 an ounce? For silver?
Do not wait until after silver starts compounding at 50% per year for 5 years in a row to start investing in silver. No, rather, you should start investing as early as possible, and you should not really care whether silver is $37 per ounce, or $49 per ounce, or even $75 per ounce. Anything under $100 per ounce is probably a bargain for silver.
I'm sorry, I was slipping into a money coma. What is the growth rate right now?
In 2010 it was almost 100%. As so far in 2011 it is already at 40%.
So silver is already on track and better to be a bull or super bull market?
Every paper currency that was ever printed in the history of the world eventually was devalued all the way to zero. Ask yourself, are you at 100% sure that it cannot, ever, happen to the dollar? And ask yourself if the cost of making war on all of Asia, to defend the dollar and prevent all people everywhere in the world from buying gold, is really feasible? And if the US printed up money to pay for such wars, wouldn't that destroy the currency even faster?
That sounds like what is going on right now. So could possibly happen to keep this from happening?
What would happen is the interest rates would have to be raised to above 30%. To provide the kind of returns that would actually compete with gold's returns to entice people to sell gold for bonds. Even though the paper printing masters can print paper fast enough to pay off such loans, wouldn't that kind of inflation just drive people away from the dollar even faster?
Sue, what you're saying is, nothing is going to stop this?
Nope, all you can do is kiss the dollar goodbye and say hello to silver and gold.